Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Very good morning. Today will be the Tuesday, the 30th of September, and also the last month of September 2025. No, the last day of September 2025, and as well as the last day for Q3 2025. So before we kickstart our gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into the chart of the day, so today will be a kind of a slimmed down version of the daily dose. Rather, I will not cover the entire full suite of the 12 instrument that we cover on a frequent basis. So I will touch on one particular intraday chart of the day, right, which I find very interesting. But before we jump into that, let's have a quick recap what has taken shape yesterday and as well as in today's early Asia session in terms of the relevant news flow, economic data release that has an impact on the intraday movement of the respective broad-based cross-asset classes. All right. So most important right now pertaining to the global markets will be the impending US government shutdown. So we know that yesterday I had to highlight that if the Senate didn't actually pass a kind of a spending bill, the US government will shut down tomorrow, all right, on the 1st of October. And in fact, potentially, we call it, I mean, on the midnight, US session midnight today, that means going to the 1st of October, they will shut down. So that actually impacted the FX market and the gold. All right, not so much on the risk asset classes over here. So what do I mean by this? All right, so let me share with you, this is an ongoing discussion right now between the two sides of the camp over here. So right now, the Republicans and Democrats remains at odds over how to fund the government to avoid a shutdown on 1st of October. So right now, or in fact, yesterday, there was actually a meetup between the White House and as well as the two leaders of both sides, the Senate leader from the Republican side and the Senate leadership from the Democrat side. So after the meeting, Vice President J.D. Vance said after the meeting, I think we are headed to a shutdown over here. So, and the remark coming out from the Senate leader from the Democratic side, which is the Senate Minority Leader, Chuck Schumer, he said that very large differences between the two sides. The Democrats are pushing for the extension of healthcare subsidies, while Republican wants to extend current funding levels for 7 weeks over here. So apparently there's a lack of progress right now so far after the meetup between the White House and the two leaders from the Senate, that means from both camps, from the Republicans and the Democrats, leaves few option or new option to avoid a shutdown beginning at 12 a.m. on Wednesday. So hopefully then there's this last minute things that the Senate plans to bring up the House bill for another vote on Tuesday. So right now things are still having a kind of a cliffhanger moment over at this point in time. But with this impending shutdown that seems to be on a higher probability right now, that created a dollar broad-based weakness over here. So what we could see over here is that this is the 5-day rolling performance. The dollar continues to remain weak against other major currency as we are speaking right now. So if we look at the 1-day rolling performance over here, so the dollar continues to remain lackluster over here. So the dollar now is the weakest against the Aussie and the Kiwi. So why against the Aussie right now? Because of the impending RBA monetary policy decision, where market expecting it to stand pat and potentially going forward the rate cut odds for the November meeting has been reduced, given the fact that the latest monthly Australia CPI data came in hotter than expected. It came in at 3% for the month of August. So that is the highest reading since July last year. And also most importantly over here is that the Fed has already kickstarted its interest rate cut cycle, so that will be able to pick up the slack from Australia. So that could potentially allow RBA to adopt a wait and see approach throughout for the remaining months of 2025. So that actually explain why the Aussie is being weak right now, down negative. That explain why the dollar is being weak against the Aussie, pardon me about tongue twisting, where the dollar is down by negative 0.16% against the Aussie dollar. So we know that the Aussie and the Kiwi track hand in hand. So the dollar is also down against the Kiwi by negative 0.16% as well. All right. So the rest of the other currency remains rather stable, almost at an unchanged mark after the dollar index plunge for the second, not plunge, closed negatively for the second consecutive session. All right. So this is the US dollar index over here. So the dollar index, okay, let me put it down. Okay, yeah, so that you guys could see. Yeah, this is the dollar index. All right, so that you guys can open up very big for you guys to see it. Okay, so the dollar index closed for the second consecutive session negatively after its retreat from last Friday. So yesterday, Monday, it closed down negative 0.25%, and most importantly, it closed down below this 50-day moving average, all right, highlighted in dark blue. And in today's Asia session, there is an intraday push up to test the 50-day moving average, but momentum can't have a positive follow through. Upon testing the 50-day moving average, there was a minor retreat where it almost closed at the unchanged mark right now. All right, as market participants waits for the outcome of a potential government shutdown heading into the 1st of October. All right, over here. And with this US dollar weakness and the impending US government shutdown, that also causes a flight to safety, because dollar being weak, then after that a weaker dollar will potentially lead to what I call a US government shutdown uncertainty. And with that, that also caused the gold price to rise as well. So gold price continues to be in our favor. Still recall that in my daily dose of market insights, I've been mentioning that gold trend remains bullish. There is low probability of a medium-term top yet to be formed from a technical analysis perspective. So gold price continues to rally strongly. Yesterday, it added 2% and cleared above the psychological level of 3,851. So a quick recap on our short-term intraday technical outlook yesterday. So the yesterday levels has already been cleared, clearing above 3,820, 3,840. The next two resistance level to watch out for will be 3,865, followed by 3,892, 3,907 over here. So key resistance level to look out for today will be 3,785, 3,077 level, which is the former significant ascending triangle range resistance, now turns into a pullback support level, as you could my screen over here. All right, so another news flow I want to highlight to you guys over here is very weak oil prices yesterday. So oil prices yesterday plummeted. Okay, so let me share with you guys WTI crude over here. So oil prices yesterday plummeted over here and cleared below our lower boundary of our neutrality zone. Okay, yesterday we flipped into a neutrality stance, not convinced of the earlier bounce that was seen on last Friday, given that there was a bearish reaction right exactly at a key resistance zone at 6690/6720. So that's where Texas crude oil, and also below the 200-day moving average, and as well as this major descending resistance that has been in play since 28th of September 2023 high. So there was a bearish reaction on Friday, and after that bearish reaction on Friday, price action can't have a positive follow through and going to plunge lower and broke below our lower neutrality zone, where we flipped to a neutrality stand yesterday. And most important, it plunged below the 20-day moving average again, and also below this 6370 intermediate support level. Now en route to retest this minor range resistance that has been formed on minor range support, pardon me, that has been formed on 5th of September 2025 during the meetup of US President Trump and Russia President Putin at the 62.15, 61.85 level. So what's the reason that causes this plunge in oil prices yesterday, which is the West Texas crude oil, was this particular news flow stating that OPEC Plus is now keen to explore another output hike for November, not output hike. That means production increase, not output cut. That means OPEC now will be continue to keep on increasing output. This, to me, in my own personal opinion, this is likely to be much more political driven under the pressure of the US White House administration that desired to have WTI crude oil price to remain below the $70 per barrel, and also most importantly, Trump desired target is around the $50 per barrel. So this is more politically driven rather than a commercial driven over here. Right, so that causes WTI crude oil to plunge. So for WTI crude oil right now, if we were to look at the current situation, for sure, it has really exit from the lower neutrality limit that we have yesterday. So in terms of technical analysis, it will have a trend, intraday trend bearish bias for now. So this level over here will be my short-term pivotal resistance zone for WTI crude. Over here, and this will be my first resistance level to watch, which is the 20-day moving average at 63.80. 63.80. So en route towards the lower limit of this minor sideways range, which is 62 support, minor sideways range support at 62.15, 61.85, using 64.90, 64.55 as my short-term pivotal resistance level for this ongoing intraday weakness on the West Texas oil. After that negative price action news flow coming out from yesterday, stating that OPEC Plus is in a desire to increase another round of production hike in the month of November. Right, so that's for West Texas oil. And if you look at the health of the US stock market yesterday, so yesterday's US stock market managed to do a bounce for the second consecutive session. So the SPX, the Nasdaq, the Dow Jones, the Russell 2000. Russell 2000 was almost unchanged at 0.04, but the other three remaining major US stock indices managed to close modestly in the green. So the SPX is up by 0.26%, the Nasdaq 100 up 0.44%, and the Dow Jones Industrial Average up 0.15%. So top performers still centered around the Nasdaq 100 heavy mega cap tech heavy centric index by looking at, if you look at this image over here, we see the mega cap technology stocks outperforming yesterday, especially the Nvidia, which is up by positive 2.05%, and Amazon up positive 1%, 1.10%. That supports the intraday outperformance of the Nasdaq 100 yesterday. So as we know that right now we are heading into the close of the monthly close, and as well as most importantly a quarterly closer. That means Q3 is today is the last trading day of Q3 that kick-started from July. So this particular chart I want to share you guys is actually a quarter 3 performance, starting Q3 performance starting from 1st of July all the way up to 29th of September, which is yesterday's closing price. So we know that everyone of us has been very focused on the US stock market, but under the radar, which I mentioned earlier in my previous daily dose, we got to be aware of the Hong Kong Hang Seng Index, which is the Hong Kong 33, driven by this potential ongoing outperformance of the CSI 300. Very favorable in terms of valuation and in terms of government specific led policy. So that has been very apparent in the price section. So based on the major stock indices globally, a benchmark stock index, the China CSI 300 is the top performer right now from 1st of July as of yesterday's closing price, which is 29th of September. That means on road for a stellar Q3 performance in the Chinese stock market. So it's up by 17.18%. So the China CSI 300 consists of the component stocks of That means the large cap stocks of the Shenzhen Stock Exchange and the Shanghai Stock Exchange. And also very favorable to the Taiwan stock market as well, 13.42. And the Hang Seng index is at 10.6%, all right, 10.6%. And the Nikkei 225 also up by 12.65% from a Q3 basis over here. And the S&P 500, yeah, even though everyone is still focusing on the S&P 500, but they only up by 7.5%. And the Nasdaq is up by 9.5%. All underperform the Asia Pacific benchmark stock indices over here, where we managed to actually so-called benefit from a softer dollar as well, and from the leadership coming out from the China related stock market. All right, over here. And in today's data print over here, is more pertaining to the China side of the economy as well. We have rather mixed reading, showing that there is no clear sign of a deflationary risk spiral coming back into play. So for the MBS manufacturing PMI data, so that is the state compiled manufacturing PMI data out from China, compiled by the statistical board for the month of September. It came in below 50, but slightly above expectation, and also above the previous August print of 49.4. Market is expecting 49.7. It came in at 49.8. Non-manufacturing PMI, which is the services side of the story, came in below expectation, but not that bad. It's still hovering at the 50 level. Market is expecting 50.3. The previous August print is 50.3. And what's interesting over here is that the red dot manufacturing previously was Caixin, so right now is another data provider called Rating Doc. So Rating Doc manufacturing PMI for China is the privately compiled PMI. It's a bit slightly different from the MBS manufacturing PMI and the MBS non-manufacturing PMI. The Rating Doc manufacturing PMI and the Rating Doc services PMI for China consists of SME company, okay, that has a much more comprehensive analysis on the manufacturing activity and the services activity in China, because usually the MBS component consists of only those state-owned company over here. So very interesting over here is that the red dot manufacturing PMI that consists of SME manufacturers rose more than expected to 51.2 from 50.3 that was market is expecting, and from 50.5 that was the previous print of August over here. So indicating that the manufacturing activities in China has indeed turned a corner over here. And also the services component from the Rating Docs also rose more than expected. So market is expecting 52.3, it rose to 52.9, almost in line with the previous print of 53 that was recorded in the month of August. So net overall, these two sets of manufacturing and services PMI data for September, compiled by the state MBS and as well as the privately sector compiled Rating Doc, indicating that the probability has reduced for a entrenched deflationary spiral in the Chinese economy. Net overall, it gels well for this ongoing medium-term and major uptrend phase of the China-related stock market over here. All right, so that covers the first segment of the daily dose. So let me move on to the second segment, which is the chart of the day. But before that, let me expand my screen so that you guys can have a better view of the chart over here. Okay, so today's chart of the day, I will be featuring the Japan 225, which represents the Nikkei 225. So yesterday, the Nikkei 225 actually have a underperforming day against its regional peers, and this underperformance is more due to a lot of the component stocks in the Nikkei Nikkei 225 going ex-dividend. And what's interestingly over here in today's Asia session, it managed to form a bullish hammer right exactly above the rising 20-day moving average at 44.5, confluence with 44,560, which is the minor swing low area of 18th of September and 19th of September. And this plunge of this 19th of September is due to that fear of a political uncertainty domestically in Japan, where the previous Japanese PM resigned over here. And what's interestingly is that after the formation of this bullish hourly hammer candlestick at the start of today's Asia session at today's Singapore 9 a.m. hour, the hourly RSI has flashed out a bullish divergence as well, where price action shaped a lower low, but RSI shaped a higher low over here, indicating that yesterday's bullish momentum has started to ease off over here for the Japan 225 CFD index. Okay, let me get it done. Okay, so this is the hourly chart. Let me put it down so that you guys could see it. Right. So with that, I will have a bullish bias for today on the Japan 225 using 44,560 as my short-term pivotal support level. Potential upside trigger level will be yesterday's minor swing high that formed, and as well as this gap down resistance at 45,270. So this will be my intermediate resistance slash potential upside trigger level. A breakout above 45,270 will increase the odds of a start of a brand new minor impulsive bullish up move sequence to revisit 45,960, which is the current all-time high area or zone in the first step. Above it, seek out 46,470 slash above, seek out 46,430, pardon me, 46,580. Only a bearish breakdown and the hourly close below 44,560 short-term pivotal support that I have for today will invalidate today's bullish trend bias to see the extension of this minor corrective decline sequence extending further towards the downside, towards the next intermediate support at 44,050 and potentially even 43,435 over here, which is confluence with the lower limit of this ongoing minor ascending channel that I drew from the low of 1st of August 2025. All right, so that's for my chart of the day for today, which is the Japan 225 representing the Nikkei 225. Now, lastly, before we go, let's take a look at the economic calendar. What are the other key data to look out for today? So today key data slash event will be the 12:30 p.m. RBA interest rate decision, which I shared with you earlier on, where market participant is not expecting RBA to cut rates after its third cut in August to maintain stand pat at 3.6%, and market will focus on RBA governor press conference thereafter at 1:30 p.m. for forward monetary policy guidance. And right now, market is expecting RBA not to have any more cuts because the swap market is only pricing a very low probability of a fourth cut in the November, and that could potentially be in a kind of a conclusion if RBA governor during her press conference shift to a wait and see approach, given that the labor market still remains robust in Australia, and given the fact that inflation trend has started to tick up from a monthly basis for the month of August. And thereafter, as we head into the European session, we do have inflationary rate flash inflation data coming out from France at 2:45 p.m. Singapore time. Then followed by 4 p.m. Singapore time, we have a flash inflation data coming out from Germany. So that could potentially influence the euro dollar, the euro crosses, and the Germany 30 CFD index over here. All right, so that is for Germany. Okay, sorry, for the Germany one is at 8 p.m. Singapore time. All right, so this is the preliminary flash inflation rate. Then thereafter at 8:50 p.m. Singapore time today, we have ECB President Lagarde's speech over here. And going forward at 10 p.m. Singapore time, we have a tier 2 jobs opening data for the month of August, JOLTS. So that is ahead of this Friday government compile NFP data, non-farm payroll data. So that will be at 10 p.m. Singapore time. Then followed by same time, conference board consumer confidence, where market is expecting a slight dip to 96 from 97.4. So these two data will potentially influence the US dollar and as well as the major stock indices. So if we start to see a weaker job opening data and as well as a weaker consumer confidence data, that could potentially see another round of a negative feedback loop on the US dollar, a softer US dollar, in turn increasing the odds of more Fed rate cuts bets into 2026 next year, and that could add more additional liquidity into the US economy, which potentially could tends to be much more positive for the US equity side of the story. And thereafter, it will be a quiet US session. and market will be focusing once it hit the 12 a.m. mark Singapore time, whether the two leaders from both camps, the Republicans and the Democrats in the Senate, whether they could be agree for that spending bill to be approved, to put into vote, or will there be some kind of still disagreement that allows eventually we'll start to see a US government shutdown, and that could impact the potentially further US dollar weakness, and potentially we may see gold continue its minor slash medium term uptrend phase with those key levels to watch, which I shared with you guys earlier on at the start of today's daily dose. Okay, so with that, that sum up today's daily dose of market insights. I'm Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.